Hey.
Hey, everybody.
Hello.
Just wait 2 more minutes or so and we'll go ahead and get started.
While we're waiting, why don't you introduce yourself?
If you don't know me, my name is Adam Linnemann, the Green Executive.
I'm Sahra Linnemann, the Greener Executive.
The Greener,
Ooh.
That's right. Thanks for joining us. We'll get started in just a few minutes.
So, let's really tell us about yourself. What's your history, bro?
My history? Why do you call me bro?
That's what the kids would say, right?
Yeah.
We are husband and wife, if you didn't know.
Husband and wife team. I started my landscaping business back in 1994, 26 years ago. And it's been successful. I met Sahra, and she helped out with growing the business with bookkeeping, HR, all kinds of different things aside our landscaping business.
Processes and procedures. Because you were busy working in the field.
I was.
And then I said, so how does this work? How does that work? Like, how does somebody know what somebody else is doing? Kind of thing. So processes and procedures came along the way. And from our experience at that landscaping and lawn care business, the Green Executive was born, where we really want to share those struggles that we've been through and how we overcame them, and bring like-minded professionals together in one place and work on building a better business. I mean, that's what it's all about, right?
So Sahra, with that being said, let's get started. Profit first for landscapers. Thank you so much for joining us tonight. We're excited to share with you a little bit of a twist on accounting procedures and a new way to look at cash flow and how to improve your business. And it's called Profit First, and it's a new methodology. So we're going to go ahead and get started because that's a few minutes after, and we're ready to go. All right. There we go. So let's redefine profit, Sahra. Yeah, go right ahead.
So traditionally, if you've ever taken a look-see at a profit and loss statement, or whether it be your own companies or another companies, or just kind of did a little research on, what is all this stuff we're looking at traditionally in the books, and when you're working with your accountant or your bookkeeper, or even when you're putting everything in the shoebox and pulling it out at the end of the year. So you've got your income, right? Can you make sure this is? Yeah, you can see that. So you've got your income. That's going to be on the top, the very top of your profit and loss statement. That's all the money coming in. You could call it your revenue. You could call it your sales. That's your income. But then the next thing on your profit and loss statement is usually your cost of goods sold and your expenses. So what happens is your income minus those expenses, that is usually the very bottom line of your profit and loss statement. So you've got a profit left at the end. Now, this is just a profit and loss statement. Your money kind of goes other places, and that's a little more in depth than we want to get into today. But this is very basic. This is income minus your expenses equals your profit that you're left over. And this could be for a year, a month. You could be looking at it for different time frames. So when we say we want to flip that, we want to rip that up and say, you deserve more than the scraps of the bottom line, right?
Well, what comes last is insignificant.
Right.
So,
that's so true.
Why not make profit first?
Because, profit should be one of our priorities, right?
Absolutely.
It should come first. So you got to have that income, right? So you could call that your sales, your revenue. It's your money coming in the door. But what we're going to do, take your profit first, okay? And then what's left goes to your expenses.
That's what we want.
This is what we want. We want you to get your profit first. As an owner or as a business manager, you're putting yourself on and working on the business, not just in the business, right? So whoever's putting that risk on should be getting the reward. And the sad fact of life is that a lot of entrepreneurs are not getting that reward. And that's not just something that we've seen, it also shows in the numbers, right? And I don't know if that's on another slide. No, yeah. Sure. But the fact is that the numbers tell us that by and large, entrepreneurs are living a life of poverty.
Well, and here's the thing is that profit should not be Well, it should be a dirty word, but profit should not be something that just happens here or maybe there and next week. It should be a routine occurrence.
And that's not to say that this isn't important, because it really is, even though it's at the bottom, it's still important. But what happens is, and we'll get to this in a little bit, is that when you're taking your profit first and you're accounting for all these really important things first, your expenses are reduced naturally, and it forces you to foster innovation and find a way. When you have to find a way, you find a way, right?
We do. So, back to that, Sarah, the GAAP, which stands for Generally Accepted Accounting Principles, your old method of income minus expenses equals profit is an axiom.
So,
all right, here's some other examples of axioms. There you go. Supply equals demand, the sunrise in the east, and so on. All right, but an axiom is what is believed to be true, but in all reality, that's why we can flip it around, because the math makes sense the other way around, right?
So whether you put expenses down here or up here, the math is going to work out the same, right? It makes sense either way. Traditionally, expenses have always been here, so everyone just kind of assumes that's the way it has to be, but it doesn't have to be that way. Because logically, this will still make sense. But when you reprioritize, there's a lot of benefit that comes to that.
We as a society are addicted to axioms, and here's some others. Like back centuries and centuries ago, they really believed that the world was flat because that's what they were told, and then finally they were proved that they were wrong. Same thing with back to
prove people wrong, guys. It doesn't have to be that way. Entrepreneurs don't have to live in poverty.
There you go.
You don't have to.
So, like we said, sales minus expenses equals profit. Not anymore in our methodology. We're gonna talk a little bit about why that is the case. And one thing I wanted to mention is that we want to help you get out of poverty. So there's 30 million small businesses in the United States, and when we classify small businesses, we classify those as businesses that are $25 million in revenue or smaller.
And we being the government and the Small Business Association.
There you go. 84% of small businesses that are $25 million and smaller are literally living paycheck to paycheck. And we're going to help you, if you follow the system, get out of that way of doing things and make sure it doesn't happen to you anymore.
That's actually a big portion of what led us to be a profit first firm, is that we were seeing a lot of our clients living paycheck to paycheck in terms of their business. And they were in what we refer to as crisis mode. You're calling up a client to see if they'll pay you so that you can pay your vendors. And they're just caught up in this cycle and constantly looking at the bank account to see how much money do I have in there, how much do I have in there. And this is a proven method, a system that we can help get people out of that crisis mode. So we knew lots of tips and tricks and lots of techniques to increase efficiencies and make that business more lean. We also love the fact that this is a actual system with a routine and consistency. So
this is going to be a behavioral change, and it's going to be something that's going to be a little bit uncomfortable at first.
Absolutely. Yeah.
But trust us, it works, and it's wonderful after you get into a rhythm and get going with it. So let's talk a little bit about that.
If it wasn't uncomfortable, if it just was the same old thing, you're going to get the same results, and we don't want the same results.
Let's talk a little bit about Parkinson's law.
I know you love the toothpaste example, so I will let you share the toothpaste example.
All right, so I have my tube of Crest toothpaste, right? And I'm gonna go brush my teeth, and I have a full tube, and what am I gonna do? I'm gonna take that tube, and I'm gonna squirt a big old blob of toothpaste on there, and I'm gonna brush my teeth.
That's 100% true.
Here's the thing, is that 2 weeks down the road, I might still be doing that. 4 weeks down the road, I might start to run out. And what do? Well, I still try to get by with brushing my teeth with a little bit less toothpaste. And how do I do that? Well, I might be rolling up the toothpaste tube to squeeze out as much as I possibly can.
And you push the middle, and then it's hard to get it to stay out while you get on the brush. You cut off the end. You force that. Sorry, I'm stealing your thunder.
No, that's fine.
You force that. You make that toothpaste last, and you make it work. And you find a way.
Well, and when you find a way, you're also innovating. And innovation is very important in a business, but you're innovating. And so you might be, like you said, you might be cutting off the corner of the bottom of the toothpaste tube to try to get out every little bit of toothpaste you can so you can still brush your teeth. We're going to talk about that and how you can do that to help decrease some of your expenses and things like that inside your business as well.
The whole point is when you have more of something, when that tube of toothpaste is new, you use a lot of it, right? But when the toothpaste is almost gone, you find a way to make it stretch and work. And that's really the same concept that is applied in Profit First, and that we are giving you a smaller tube of toothpaste rather than that whole big tube.
And your toothpaste is your money, and since it's available, you spend it. And like I said, we're going to help you definitely cut down those expenses to make sure that you have more profit. Bank balance accounting.
Yeah, so when we talk about we're going to give you that smaller tube to work with, what we literally do is through Profit First, you open up several different bank accounts, and there's a lot of details as to where and whom and what type and all that, but we're going to keep it really broad and share with you that all your money coming in, right, let's get back to this, all your money coming in, your sales, your revenue, your income, it's all going to go into one place, okay? So it's all coming here. And then every so often, usually twice a month, you take your money from here and put it into these 4 different places. All right, and the 4 places are your profit, a tax account, because a healthy, profitable company will have to pay taxes. That's just a fact. Owners pay, right? And then operating expenses.
Or OPEX.
Okay, so what we're going to do is harness that power of the habit of looking at your bank account and seeing how much do I have, how much do I have. And instead of seeing this, you're going to see this. Okay, instead of seeing this big full tube of toothpaste, you're going to see the smaller tube of toothpaste, the smaller plate. So it's the tube of toothpaste, it's portion control, we're all about food, so it's gonna, of course, it relates back to food for us, for sure.
Barbecue or anything,
Right, yeah, as you have like barbecue rub literally sitting at your desk. So that's literally what we do, is help, as a Profit First professional, we help you transition from this to these.
There you go. Let's move on. We're going to talk about taking your profit first always. So once again, we need to focus on what comes first, right? Mm-hmm. And that's important because we need to be focusing on our profit and how can we increase that. So Parkinson's law, how we talked about that earlier, that's definitely an ally.
That's the toothpaste, yeah. You work that to your advantage.
And also, if you can think of profit first, it's very similar to like your 401k. At a company you work for, you're funding that first before you get your paycheck, right?
When that's coming out of your check, you just live your life without it. You don't even notice, and that's building value behind the scenes. Same thing here. We're going to pull these away so that you can just run your business, and keep in mind this is all happening behind the scenes.
Let's set the table.
Well, let's do it.
It's time to eat. Let's set the table. All right, so tell everybody a little bit about the first step in Profit First.
Well, the first step is literally setting up those accounts. So setting the table, getting your plates, right? So you're going to have, everybody probably has a bank account already, right? And most people will use that as the operating account just because you've probably got bill pays going out of it already. You could use it as your operating account or maybe your income account, depending on what's easier. But you're going to want these 5 core accounts. And that's not to say we wouldn't add some depending on your business needs, but it just kind of depends on truly customizing things to your business. But everyone starts out with really 5 core accounts. So set the table. You want to have your income plate, your profit plate, your tax plate, owner's pay, and then operating account, okay? So those are 5 plates that all sit around at the same table.
So we have on here a lesson from the health industry. It's no different than portion control. It's no different than meal prepping in a way. These are your plates, your bank accounts are your plates, and you have to have so many funds and financials into your accounts to make sure that they are aligning accurately with how you can grow your business and profit and pay yourself. That's really simply all there is to it.
And studies show that the smaller plate that you use, the less you're going to eat. Same thing here. The smaller the plate, the smaller the tube of toothpaste, the less you're going to use.
Step number 2, vegetables first.
Well, that's your profit, right? Vegetables are the good stuff, right? You feel so much better when you're doing it too, don't you?
You do.
As he had nachos all day today.
Yeah, if you follow me on social media, you know I had some nachos today.
Yeah, that's okay.
So we're gonna serve it up.
That's right. Serve it up. Serve those vegetables first. So what you've got your money coming in, right? Your money's coming in routinely. You're invoicing your clients, they're making their payments, money's coming in routinely. And then we're gonna carve this up and we're gonna serve it up. And we're gonna serve profit first, and then all these other accounts, tax, owner's pay, and then of course your operating account.
Sure. How do they know, like, you know, how much money to put in each account?
Sure. So it kind of varies, really. It varies depending on your needs in your business. So we talked there about TAPs. TAPs would be your target. TAPs are your target allocation percentages. That's the long-term goal, right? And depending on where you're starting from, it might take a small amount of time to get that long-term goal, and then you readjust it, or it might take a long time to get to it. It's unique for everybody, and the stair steps in between where you're starting and where your target is, those are your caps, the current allocation percentages. So you have your starting point. I'll do it backwards. You have your starting point, right? And then you step it up until you get to your target. And there might be more or less steps depending on where you're starting from. And the steps in between, those are called your current allocation percentages.
Who determines those? A profit first professional.
Right. So we help people determine, you know, where they are. And that's not to say that they don't need adjusted along the way. We guide people through, hey, this is your starting point. Let's see how this goes, see how much progress we can make, and maybe we can get it done a little faster than we thought.
I like it.
Yeah.
Ready for step 3?
Step 3.
Remove the temptation.
Okay.
Hide the dessert. I don't know if I could deal with that.
Right. Lock up the cookies, which we went through a bag of cookies in 2 days, I think. But anyways, we have 2 boys, so. But you've got your 5 accounts here, right? And when we say remove the temptation and lock this away, we're referring to 2 other accounts. Okay, you might have noticed that our income went to profit and tax, right? And then what we want to do is use these as piggybacks to just leapfrog, however you want to word it, because these are all at the same bank. So when you pull your money from your income account to these others, it happens instantly. It's right there. So we don't want you to be tempted when you look in there and see, hey, I have all this money sitting in my profit account and all this money sitting in my tax account, because that's not to spend on whatever fun toys you want around the shop, right? That is reserved for profit and for tax. So what we do is we take that money from there and we bring it over to 2 different accounts in a different bank, a bank that is out of sight, out of mind. You don't have a debit card for these. They're not easy to get to. You can't just make withdrawals super easily. These are 2 accounts that are truly bolted away.
So let me get this straight. We're going to recommend they have 5 accounts in one bank.
Yes.
And then the other bank, somewhere far away, maybe an hour away from you even, 2 hours away, you're going to have 2 more accounts at a separate bank, and that's going to be your profit hold and your tax hold.
Right.
And we want you, if you have money in these profit hold and tax hold account, we want you to literally drive with your head down to get to that money if you have to, because that's the vault account. You should not be touching that except for once a year.
Or quarterly.
Or quarterly.
You're going to pull your profits out. Yes, celebrate.
Celebrate.
For sure. Or pay down debt, which is a celebration in and of itself.
Yeah.
But you're always going to celebrate at least a little bit, because that's an accomplishment.
So it's important to be consistent.
For sure.
Right?
Yeah, consistency is so essential, for sure. And when we talk about the 10-25 rule, that means consistently moving your money, right, from the income account to the others, then to the others, usually on the 10th and 25th. The that's referred to as the rhythm that you're doing your money, and you're paying your bills on that same rhythm too. Now, maybe for you, it might be a different rhythm. It might be weekly, depending on what your cash flow is like. So it just kind of depends on what's specific to your business and what works, because that's the whole point. This isn't a out of the box kind of thing. There's no like hard and fast rules for the allocation percentages. And when you do your rhythms, it's really to suit your needs. And even how many accounts, it's really to suit your needs as a business, and so that you can grow in the Profit First program and reap those benefits of it.
Accountability is super important because, like you said, you have to be consistent. You have to have the rhythm down on a regular basis, and to make sure that you're continuing from your current allocation percentages that you are where you start to your target. Accountability is what it takes to make sure that you're making that transition into being a very healthy and profitable company.
Yeah, build that muscle, right?
Profit First for Landscapers Facebook group.
Join us.
We'd love to have you there. It's an exciting group. We have quite a few members getting there now. We'd love to have more. So we're talking Profit First all the time. So
it's open to all. Everyone is welcome. Of course, it is landscaper specific. So as you're going through the system, or as you've been through the system, we would invite you to share with others in what's worked for you, what you're struggling with. Absolutely join us.
So let's kind of wrap up a little bit. So implementation, how does that all start?
Right?
Yeah, exactly.
So it is going to be a commitment, right? A commitment to consistency and a commitment to change. And sometimes change is uncomfortable. It's intentionally uncomfortable because we want different results. If we weren't pushing ourselves a little bit, and that's what we're here to do, right, is to push you a little bit and to make you ask those really hard questions. And it does require sometimes some really tough decisions to be made.
So yeah, with that being said, so we help with these expense analysis to trim that fat down, to build more muscle in your business.
What he means by that is when you're reducing what you can spend from this to the OpEx, sometimes that's uncomfortable, right? And sometimes it requires those tough decisions of, where's the money going to come from? But there's a lot of different ways you can do it. It's not just slashing. There's a lot more to it than that.
So we can help you with that. Definitely set up a free discovery session with us if you have interest, and we are happy to get things rolling.
The number one thing, even if you're not quite sure if Profit First is for you, you can always read the book, or I prefer to listen to the book because I can do it while I'm driving or doing other things. And the book itself is read by the author, and he adds to it. So he definitely enhances it. So I do recommend the audiobook for sure, then the book, and then if nothing else, there's a summary book too.
There's a summary book. Yep.
But I prefer the full book if you're going to go for one. And then, of course, get yourself another bank account and start putting 1% away. That's the tiniest little baby step that you can do to start, and see how quickly that 1% of all your income adds up. And I guarantee you're going to be able to run your business without even noticing the change.
So check out Profit First. We're happy to help you with it. We want to really, really help you try to end entrepreneurial poverty once and for all.
And that's not easy to say.
It isn't.
It's not easy to say, but absolutely reach out to us if we can help you. We're really, really excited to see you grow.
There you go. thegreenexecutive.com/Profit First. Thanks for tuning in to our webinar, and we will talk to you all next time.
Thank you so much for spending some time with us.
Have a good evening. Take care. Bye.